Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look again on the euro currency. As we mentioned yesterday, that euro currency right now doesn't have any intrinsic direction, so inner direction. So it has, it mostly is fluctuating by impact of some external factors, and we yesterday have talked about it. So different political statements and other this sort of the action. So today we also will get the non-farm payrolls release, since euro currency is flowing here and there by the external impact, it's very difficult to make any forecast on a possible direction on the market. We just could judge on the possible waves how market could develop only by some relative signs, indirect signs that we see. So in the longer term perspective, as I said, personally, I'm skeptical about the immediate upward action by the moments that I see. First of all, as I said, we have the weekly recovery, and in general, overall action after rally already has started here, retracement has started, has finished. Here, guys, should be this kind of action should become the continuation actually of this kind of action. And if market, in its normal bullish market, doesn't show this continuation, it could mean something. Although, in a longer term perspective, as I said, in the weekly, overall situation looks not bad, because market actually comes to major support, this 1185. And bullish divergence also is forming on the euro currency on the weekly chart, as you'll see. I will show on the dollar index. You will understand it better. So we'll take a look at the weekly chart of the dollar index. You will see. Then here we have a clear look of the bearish divergence. Dollar index develops in the opposite direction to the euro, so it means the weakness of the dollar. And so you could take a look. It's forming the rising wedge pattern here, right at the major resistance. That increased chance on a drop here. Maybe it will not be the final reversal. Maybe it will be just harmonic retracement equal to this swing, but this is, guys, the weekly chart, and that will be really significant. It means that on the euro currency, in the longer term perspective, market could probably show the upward action, but it's a bit longer term distance, longer term time frame. If you'll take a look at the daily chart, in the daily chart we have mostly the same, so take a look. The same divergence here with the wedge pattern, but I'm not excluding the final spike that here could be formed. That's what I'm watching for here, actually, guys, and that's why I have some doubts on the immediate reversal, because it's very probable kind of the wash and rinse before reversal, and it really could happen. And actually, the thing why I'm thinking so is because market doesn't start the immediate action to the downside or on the euro currency to the upside. And by this reason, I not exclude the chance that market could show some spike up, grabbing the stops above it, above this area, and then starting downward action. So that's what worry me in a nearest term perspective. Following this logic, on the daily chart of the euro, putting it all together, I've not excluded the chance that market could still show this action. But currently, as I said, market behaves so that it stands in the tight consolidation. So you can see we have multiple overlapping candles. In fact, we have no direction. If we exclude the spikes out of this range, you can see that actually market stands inside of the range of this Powell speech and falling drop before the J20 meeting. And all these action stands inside of this range, exclude this spike. So market has failed to break in as to the upside, to the downside. So, and I would suggest that further direction will follow depending on the breakout. So as we'll see the breakout of this consolidation, we will get the direction. This will be either butterfly down to the downside, mostly the same as we have on the dollar index that I have shown you just a few minutes ago, or we could get real A, B, C, D upward action on daily chart. That's why currently, today also non-farm proposal is, and currently we should keep an eye on this consolidation and possible signs of the breakout. If you'll take a look at the 4-hour time frame chart, guys, here we have some just nuances and moments that maybe will have some meaning, but they're not really very bright. In fact, market stands tight in a consolidation of the crossing of the two channels. One stands to the downside, this market stands inside of it, and now it's another upward channel starts to form. And market consolidates inside of this crossing of the two channels. So you can see first bounce from this area, drop back to this low here, again testing the crossing point, drop to the new channel. Now it's meeting the second channel, first channel, and it's forming kind of the not quite diamond, but this tight in consolidation. Having this bullish divergence, it will suggest that maybe some upward action above this taking out of this top could happen. And also we have this ABCD pattern, and the COP target has not been reached. But I suggest that really, if this will happen, I am not sure that the upward action will continue. So more probable this will be kind of the spike here, maybe just to complete this target, or maybe even this spike will not happen. So generally speaking, that is the consolidation that we should keep an eye on. Breakout above these tops will tell you that upward action will continue. Breaking below these lows, below this support area, will confirm the idea that probably market is forming this butterfly, or at least kind of the ABC reaction to the downside could be formed. So that's that is what we should keep an eye on today. The same story on the hourly chart. On the hourly, as you can see, market stands tight inside of the triangle. It's very difficult to find some clear patterns here. So the only bullish factor that we have is just market hasn't reached the lower border of this triangle here. As you can see, it turns up a bit early, but it's already 2 times tested this trend line. So what I would like to say is that situation really difficult, because on the high time frames we still have the signs that downward action should happen before final possible reversal that could follow after that. And this factor doesn't let us freely possess ourselves on the long side of the market. So to do this, we need to wait either eliminating and crushing of these bearish setups. There's clear signs of the strength on the market, some thrusting action to the upside that will let us to suggest that indeed upward action is continuing, or waiting the completion of these bearish patterns, particularly speaking the grabber. So we need to take it out of the 112 lows, reaching of the major 1185 fib support on the weekly chart, and after that we could start watching for some bullish patterns that could appear in this area. Maybe butterfly will be formed here. It's also possible. So that is what we see right now on the euro currency. You can see our overall situation is not very friendly for trading on any sort.